What's up, everybody? Welcome to the Stocks channel. Today the triple Qs closed at brand new all-time highs, and it's very likely the S&P 500 is right behind it. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. Today SPY was up 0.89%, and yesterday I talked about the bear and the bull scenarios, and I told you the bull scenario was my highest probability chance simply because we have a bull trend. And remember, there's no emotions in this game. We're simply reading the chart and trying to find what is the highest likelihood chance. And with the highest likelihood chance, that doesn't mean it's guaranteed to happen, but with today's price action, we did gap up above that rising 20 daily moving average above 473. And I told you above 473, the bulls are regaining control, and that's exactly what we saw today with the close all the way up here, very near to a brand new all-time high. So I continue to tell you, I do believe SPY is likely going up here into the 480s to make a brand new all-time high, and it looks like it's trying to get to 482. We need to break 480 to break to a new all-time high, and we have a current price target just above it at 482. So while we are above this higher low pivot above 473 and above this pivot around 470, it looks like we're going to 482. And yes, we can go higher than 482, but that is simply a target for us to pay attention to over the next few days. Now, keep in mind, we have the bull trend, so we're assuming we're going higher, but there's obviously always going to be a possibility we don't go higher. And for that reason, simply manage your risk around that 473 level. And if we break below it, that is telling you the bulls are getting a lot weaker, because if we're in a strong bull trend, we shouldn't hesitate to find buyers at 473, which means we shouldn't break below it. So if we break below 473, still pay attention to that level as your risk level. And below that, we could still come down here towards the critical support at 467. And if we were to break down below 467, that's the bear breakdown, and that confirms this is a double top rejection. That means we're going down towards 458. So again, we have a scenario for the bull and bear scenario. We're simply following the highest probability chance right now, which is going to be that brand new all-time high on SPY. And you can see we did go up on increasing volume today. Now keep in mind, there's always going to be bearish narratives, and there's always going to be people calling for a stock market crash. That is typical for every single year. You are always going to have these people calling for crashes. That doesn't mean it's going to happen. And then if we did get a crash that year, they look like geniuses, but then you check their track record and they call for a crash every single year. So when you're trading, you really need to only follow the chart. There's really nobody's opinion you need to follow, because all of the important information is right here on the chart. We don't need to go looking for anybody's opinions. On the NASDAQ 100 triple Qs, we were up 1.42% today, and just like I told you, it looked like we were going to all-time highs on SPY. We did break out to a brand new all-time high today on the triple Qs. So not only did we break at an all-time high, we also closed at a brand new all-time high, which only further validates that we're likely going towards my price targets at 414 and then 420. Now, we did open a gap down here, so be aware of this gap down here right around 407, and keep in mind that gap could fill at a later date after we go reach new all-time highs. There's no guarantee that gap has to fill now. So be aware of the gap, but don't panic just because there's a gap there, because we do have the bull trend and we're currently above the rising 5 EMA. So this is a very strong bull trend, and if you look at the volume, we did have an increase in volume today. So as we push out to a brand new all-time high, that is going to start squeezing short sellers, which means it could become very impulsive and we could go much higher. So follow the trend, and this is still a bull trend, especially while we're above 404. And now you could even move your risk level up here to the rising 20 daily moving average at 407. So have a plan. The plan is to stay bullish above 404, and if we break below 404, then we're coming back down to the critical support at 396. There's no reason to assume we're going to get a bear scenario unless the price action tells us, and right now we just got a bull breakout, and we're currently closing at a brand new all-time high on increasing volume, so there is nothing bearish about that. On the Dow Jones, we were up 0.56% today, and the Dow Jones hold that support right there above 370 at the lower Bollinger Band, and from here we just need to get a break back over this 20 daily moving average above 375, and that should be enough to push us towards the brand new all-time high price targets in the 380s. At any point we break down below 370, that's a sign to get risk off in the Dow. And that could mean we're coming back down towards this rising 50 EMA at 365 or the breakout level at 360. So you can wait to get bullish until we break above 375, or you can manage your risk while you're above 370. There's plenty of ways you can trade it. Just be aware of the critical risk levels. On the Russell 2000 IWM ETF, we were up 0.59% today, and we did hold above that 50 EMA for the second day in a row. So it still looks likely that we could bounce from this zone at 188 to 189 and bounce towards this gap close above 198. Now remember, we looked at the weekly chart chart yesterday, and the weekly chart tells us to stay bullish above 188. And on the daily chart, I think you should stay bullish above 186. So anywhere within the high 80s is a great risk level to be long on IWM. And of course, if we break down below it, that's your indication to get more risk off, as we're likely going down into the low 180s. But there is a ton of support in the 180s on IWM, which means you could take low risk long trades here, especially knowing the price target at 198. If we blast through 198, we're looking for a push higher towards 203 and 207. On the ARKK ETF, we were down 0.57% today, and we're trying to hold this support right around 55.7, but if we break down below it, we're likely coming down here towards 44 to 43. This is a risk off look while we're below 48, so if you want to get bullish, you need a break back over 48, or you need some type of reversal of this current downtrend. We'll follow it day to day, but right now this is still a downtrend, especially while we're below 48. On the VIX, we were down 4.59% today, as the VIX is crushing from that resistance right around 15. And remember, I told you if the VIX spikes towards 15, that is simply just a pullback within a bull trend. It's only if the VIX gets all the way out here into the 18 and 20s that we're going to see high volume panic selling. And of course, that needs to be paired and coupled with a break of critical support in the indices, which we have had neither. So do not get bearish just because the VIX is spiking to 15. That is simply just a pullback within a bull trend. On Bitcoin, we're currently down nearly 4%, and Bitcoin is breaking down as it tries to reach my price target down here at 38,000. And this is simply just one of those sell the news events I've been warning you about, that Bitcoin is likely going to sell off until we lose retail interest. This is a very common phenomenon of buy the rumor and sell the news, and I don't believe the sell the news event is over just yet. We're likely going to want to see retailers wanting to puke on their shoes for buying Bitcoin ETFs until this is all said and done, which means we could go way lower than my price target, or we may not even reach my price target at all. This is simply just my opinion. But the chart is now agreeing with my opinion because we do have the lower high, lower low breakdown. So while we had an idea, we are confirming that idea with price action and the chart. And you can see the price action is below all of the moving averages now as we are heading towards my price target. So this isn't an idea that has no objective evidence. We are getting very clear objective evidence from the price action that this could still be playing out. So again, there's no reason for me to change my opinion while the chart is agreeing with me, and the next bear breakdown is going to be the breakdown below support at 40,500. And I don't suggest getting bullish unless we can start breaking back above 44,500. On Nvidia stock, we were up 1.88% today, and Nvidia continues to blast to brand new all-time highs, and I'm going to continue to remind you, do not bother shorting this stock. I've said that so many times, and I'm going to keep saying it until you're sick of hearing it from me, because a lot of you need to hear that because this is a bullish freight train. I still think we're going towards 600 before earnings, and earnings is still about a month out, so we have plenty of time to get there. Right now, you can see we broke my price target at 563, and above that, I have us going towards 590, and in the longer term, I have us going well into 600 and possibly even higher. So don't bother shorting this stock. If you don't want to be in this stock, simply watch it from the sidelines. There's no reason to cause personal harm and damage to your portfolio because you're trying to short a bullish freight train. If we start to pull back, look for possible support right around 563 and 551. On Tesla stock, we were down 1.7% today as we did get that close down below 214, and I told you below 214 I had a very strong support between 207 and 208. So now that we're below 214, it looks possible that we are going to that lower support. However, I am personally thinking this is a buy zone for Tesla between 207 and 214, and I still think we could easily see a very impulsive rally towards 225 and 231. So I still think this is a low risk opportunity, and while that is trying to catch a falling knife, you can easily manage your risk at my support levels. If we break below 207, that is incredibly bearish. It means we're likely coming all the way back down to 197. And below 197, it looks like Tesla is back into a bear market. So don't give up on Tesla just yet. I'm personally thinking this is a buying opportunity, but we're going to let the price action do all the talking from here and manage our risk around these critical levels. On Apple stock, we were up 3.26% today, and Apple had a monster gap up and a monster move higher towards that negatively sloping 20 daily moving average, which is also our resistance zone between 188 and 190. Now that we gapped up, we have to move the gap down here towards 183, and we still have the gap up here below 192, which is the price target that I had as long as we were above 180. So now you can also look at this as a double bottom breakout because we did get two bounces off of 180, and we did come up here and break above the neckline, which was that level at 186. 186. So if you do a simple double bottom breakout above 186, that is a very bullish bounce all the way higher to our price target at 192. So it does look like we are going there. And now we have the bullish double bottom pattern breakout to tell us we're likely going there very soon. So stay bullish on Apple, especially now that we're above 186, and we can move that level at 185 to the neckline. So you can manage your risk at the 186 breakout and still right down here around 180. And if at any point we break below 180, it's risk off, and that means we could be going down towards 177 and 174. So jumping back over to the S&P 500, everything on the chart still tell us we're likely pushing to a brand new all-time high in SPY, and we just hit another brand new all-time high in the triple Qs, and we're likely going to see the same thing in the Dow Jones as well. Again, there's nothing emotional about this. We're simply reading the price action and the trend on the chart, and we're managing our risk around critical levels so that we can remain profitable traders and maintain proper risk reward ratios on all of our trading. This is the approach you need to take each and every day if you want to be a profitable trader. And there's nobody's opinions or any news headlines we need to be aware of, because all of the information is on the chart right in front of us, and we simply need to listen to our chart. So I'm still expecting a very profitable trading year for 2024, and we are going to absolutely crush the market this year. So if you want to come crush the market with us, consider joining Bank Trade Alerts. You'll get all of your buy and sell alerts via email and text message for the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the links in the description of this video. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stocks Journal Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.